Okay, welcome to Ring the Bell Investing with the Masters of Marketocracy. Joining me tonight are Kyle Hardin, Glenn Brownworth, and Eugene Grossman. Welcome, gentlemen. And let me start out by asking this. The market's been moving through the wall of worry recently, close at 60.45 today, the S&P did. Where do you think it's going to be at the end of the year? Glenn, why don't you start there? You hit it last year.
Yeah, I'll tap myself in the back with that. We did our 20% last year. We hit it by somewhere in the middle of December of last year. And then in the matter of 3 months, it went back 20%. So this has been an unusual year. But what's amazing is I'll say this about the resilience of the country is that we've gone basically right back to where we were again, even with all the chaos that's going on right now. So I think I'll probably be a little bit more conservative this year than 20%, but I think we could maybe see 10%, maybe if the S&P is still going like this. But I'm just being very conservative now. Hopefully things will be stable through the summer, and the chaos in Washington it will affect this. But
So give me a number, Glenn. We're at 60.45 today. Where are we going to finish the year at?
God, let's say I could see us maybe being around, considering we've done 20% again, we pulled back all that way, I'd say 6,700. I'd say that's probably a realistic conservative number. So put me down in the contest for that.
I'm putting it down right now, Glenn. I think it's a little bit more aggressive than being called conservative. So
yeah.
We'll give it to you. We'll give it to you.
Okay.
Kyle, what are you thinking?
Yeah, so I'm in line with Glenn. So I think we're going to see a lot of ups and downs. I mean, we see the way the administration moves. I mean, there's going to be a lot of levers and things that are pulled and pulled back, right? So we've already seen that, with the tariffs. I think we'll see it a bit, later on this year with the interest rates. So I mean, we'll see how it goes. I'll go just a hair above Glenn. I'll just take an over. Just to try to get the range above it and be a little bit more optimistic. But I still think, I don't think we hit like 7,000. I think it's probably more in line with 6,800, probably towards the close, to the end of the year. But I think it's going to be some wild swings, along the way with the way the levers are pulled back and forth.
I like it. And we have Eugene, who's called in tonight because he's traveling. Eugene, what are your thoughts? Eugene, you're on mute.
Yeah, sorry. All right. Yeah, that's a little bit of a loaded question for me. The whiplash the markets have been going through are, just a symptom of policies that are enacted and retracted and enacted and redacted. Normally, the policy and it sticks, and you can kind of make your assumptions, predictions from that point. The reason why I think the inflation numbers came in light or soft is because all the pretty much most of the tariffs that were enacted were pretty much taken away. So there hasn't been no real inflationary hit on the consumer side, like in a broad scope on most products. Um, if those 90 days run out and nothing's extended, I will see inflation. We'll see inflationary numbers hit, and markets will reverse course again. And it's really dependent on what this administration does at the end of these 90 days, in my opinion. So I'm going to give you a scenario for both. If the 90 days run out, there's no deals, and these tariffs go back into effect, and nothing happens, I see the market down 10% for the year, S&P down. Conversely, if there are deals or they don't reinstate these tariffs, I see the market as looking at that as a positive sign, and 67, 6,800, maybe even a little bit higher based on just euphoria that whatever this tariff thing is kind of over, and they're expecting bigger and better things.
Okay, so we've got the barbell from Eugene. playing both sides depending on what goes on. And that's certainly understandable as it has been a very crazy, volatile year. Um, but playing it safe there both ways. I'm going to remind everybody that earlier in the year, Glenn and I were on a call, and Glenn called for 65 to 6,600. So that means Glenn is slightly raising his target now at 6,700. My target, my call earlier in the year was 6720. I am going to actually lower that a little to 6550. I think we're going to continue with some volatility. Hey, I hope we end up at Kyle's number of 6,800. And we're still 6,550 is still almost 10% higher from here. So I do think we're still going to go a bit higher, but I'm going to throw that number out there. So we'll see where we end. Glenn had a great call last year, and we'll see what happens this year. So next question on today's agenda is CPI and PPI. Both came in a little lower than expected this week, not by much, but by like a tenth. So is it all clear signal for inflation? Do we need to continue to worry about inflation right now? Kyle, you want to take that one first?
Yeah, I don't think it's all clear, and I think some of the points that Eugene was just hitting on. I mean, a lot of it has to do with what the administration does, here forward. Like, when you listen to Trump, he wants to drop rates to zero, right? So I mean, there's a lot of things depending upon, what would normally be seen as like drastic actions, and obviously, the Fed has to obviously weigh in there. But I mean, with the way the administration, jumps from 0 to 60, I don't think we'll ever be in the all clear until we see how things play out. Because right now, when we have more stability, I think it's a little bit easier to see down the road and understand the roadmap and how things are going to play out. And you can look and say, okay, yeah, the Fed's going to do a quarter point drop here and there, and you can kind of understand, where the market's going to be, from a broader forecast, looking at like, down, the year or over the course of 2 years. But with the way we move now with the whipsaws, it's a little bit harder to play out if we're all clear for inflation. I think if we do keep a steadier hand, I think we're in great shape, right? But if we have more whipsaws like we're expecting, then I think you certainly have to be aware of it.
I like the analogy of 0 to 60, and I'll add, then put on the slam on the brakes and go in reverse.
Right.
Yeah. Eugene, what are your thoughts about CPI, PPI, and inflation?
Kind of what I mentioned earlier. The reason why, those numbers are still trending, are still in that lower part of the band is really those tariffs really haven't hit consumers yet because, like I said, they're on pause. If they go into effect, inflation jumps through the roof, and I think the Fed. Um, the Fed lower expectations for GDP growth because of these tariffs, and now they're waiting to see what's going to happen after these 90 days have expired. And I kind of see what Powell's kind of long game is, because he wants a lever to pull. If these tariffs go into effect and markets start tanking or start reversing course, he can pull a lever in lower interest rates then. Um, I don't know why at this point why Trump is really pushing for the zero interest rates again. Considering if the market's doing well, and if he keeps basically saying the markets are doing great, everything's great, why do we need zero interest rates? The only reason we had zero interest rates for so long is because we were coming out of the Great Recession and you need liquidity. And then we pulled liquidity back to we had like 15-year run of market of booming markets. So you want to have a soft landing. QE quantitative easing ended. So there were reasons why interest rates went up, but there's really no reasons for them to go down right now. There is no economic necessity for them. So I don't know. Trump's pushing for these lower interest rates, but I think the Fed wants a lever to pull. They'll have some meaning to it if they need it.
Yeah, interesting about the Fed and Powell too is that his term expires next year, and so we all know how President Trump operates, and obviously he'll put somebody in there next year that's going to do what he's looking for, and we're probably going to have lower rates by next year if we don't lower them this year, and I think that If CPI and PPI stay down, we can see some lower rates toward the end of the year. However, with Powell being on his way out, I just wonder if he might just hold off, knowing that they're going to go down next year anyways. Glenn, what are your thoughts on this?
From what I'm looking here at, the recent stat is that for the last 12 months, our inflation's at 2.4%. I think, like Eugene's talking about, we've been spoiled at least up until the pandemic by 12 to 13 years of amazing interest rates, and everything was stable after the mortgage implosion of '08. And you know, we've always talked in the past about how the Fed is always playing catch up. We understand that because they're just trying to be careful. But I think right now, like you said, they're just kind of keeping one of their cards up their sleeve. So if they have to really do something right now, they can always lower interest rates. Lowering an interest rate to zero really actually kind of breaks the whole mechanism. A little bit of interest is actually kind of the profit built into the system. So it's kind of like a little bit of grease in the gears. But if you go all the way down to zero, it actually kind of hammers the way the market works and actually causes problems like Japan, where they went to like negative interest rates and it actually caused more problems. They had nowhere to go. So even back in 2020, they talked about that. It's a misunderstanding of how he thinks if we just go to zero, everything will be honky dory. It doesn't work like that. And at 2.4% inflation, other than food and other things, I mean, that's still pretty amazing for where we were 5 years ago. Except for eggs, it says 41% or an increase, but that's because they had to cull 100 million chickens. That's an oddball inflationary thing. It's like somebody, there was a peanut butter shortage or something. You can't just blame one thing. But the Federal Reserve, they have to be conservative, and I think like Eugene said, it's just biding their time, and they don't have to do anything right now because it's relatively stable and the economy came back after everything in the spring. So I think they're just going to leave it alone for right now. Why do something now when they really don't have to until maybe in the fall sometime or after the summer doldrums? I think that might be it, but I still
definitely agreement there that it's not going to happen right now because we really don't know the impact of the tariffs yet. Thank you, gentlemen. Let's move on to the next question regarding Boeing. Unfortunately, today, Air India had a very unfortunate crash, a fatal crash. And first of all, our thoughts and prayers go out to everybody involved and all the family members. 241 deceased off of that plane. The largest air disaster in quite a long time, and the first fatal crash of a Boeing 787. That plane was, well, before I talk about that, Boeing's just getting past all these other issues that they had with the Maxes, with the door flying off the Hawaiian airline, Alaskan airline flight. The stock pulled back today about 5%. Will Boeing get past this, or is the stock back in the penalty box? I'm an investor in Boeing, and I don't recall if the others of you have Boeing in your portfolios or not. But anybody want to jump in and talk about this with Boeing?
Sure. I think it all depends on what comes out of the investigation. I was listening to the news, and they had like a senior aviation expert, and they said that there were some oddities in the takeoff, that he did not see the flaps extended on the plane at takeoff, and was curious as to why the landing gear was still extended, past the point where you normally would see the landing gear come up. So there's, I'm not saying this is the case, but if what he believes, which is there's some sort of misconfiguration with the plane pre-takeoff, caused the crash, Boeing ends up nothing happening. It's really ends up being an error with like the operation of the plane. Conversely, if it comes out, oh, everything was set, they thought it was set, the black box shows look, it was set, but there's some sort of like issue with the mechanisms that didn't work, then yeah, they'll get hammered.
Yeah, any Kyle or Glenn, any other thoughts on that before I jump in on this one?
Well, I mean, it's not been a good year for Boeing. They trapped their astronauts up in space with their spaceship. You know, they've always. I mean, Boeing is really a product of the American government 100 years ago when they basically helped create the airplane. And they put airplanes into the military. So all these giant companies have been subsidized somehow by Uncle Sam for well over a century. And the problem is, back in the 90s, the Pentagon kind of asked these giant defense contractors to kind of merge together. And now we have 4 or 5 monopolies and they're struggling. So they've learned that maybe they should have a bunch of little smaller companies that are a lot more nimble to create technologies like that. And I think just it happens with a lot of big companies like Boeing. It's management and mid-management and people worrying about their bonuses and this, that, and the other thing. And eventually, they forget to put a door on. They forget to put the bolts actually on the door. I mean, these are structural issues in the company. And it's, when people are falling out of the sky, it's not really good. But the problem is we have a duopoly or maybe a triopoly. We have Boeing, you have Airbus, and you have, what's the, I can't think of the other European company. And
Bombardier?
that's the one, Bombardier. Yes. So those are the three guys in the world that basically build commercial aircraft and stuff for the military. This is one of the problems with monopolies or oligopolies. They start to fall or cave in on themselves from their own weight, and eventually, you start to get the phone company where you can just have one phone and that's it, and that's all you can get from the phone company, and it could be a problem.
Some very valid points in there, Glenn. Kyle, did you want to add anything on this?
Yeah, I was going to say, for one, obviously consumer sentiment's going to be tough, right? So you're thinking about the average person, they're not going to know all the details, but they just hear the stories, right? And of course, none of these stories are going to resonate well. And there's still things out there with whistleblowers. I just read an article, I think it was in Forbes in February, where they were talking about the Boeing whistleblowers and what was going on there and the concern and that was with the Air Maxes. And so, but the difference here is that the consumers really don't buy Boeing, right? They're buying flights on airlines who are the purchasers of the airplanes, and the end consumer, meaning just like the average person, isn't the one making the decisions on whether they're buying Boeing or not. So and there's very limited options in who you're flying with. So will it translate to losses to Boeing directly? It's going to be limited from that approach. And to Glenn's point, there's only certain places you can get these planes from. So I think it is problematic. There are certainly lawsuits and things that are out there, but those things are also going to take a lot of time to play out. And so Boeing will have an opportunity, just like they've had with the last cases, really to, try to recover that. So I think it'll be a slower decline, but they really need to get on top of, their quality and their branding, because we've seen it really struggle here over the past couple of years.
Yeah, all three of you, great points, and I agree with most, if not everything, that you all said. I look back to Boeing when the door flew off that Alaskan airline flight headed to Hawaii. And Boeing was trading about in the 230s, and it had a big run. And when that happened, I didn't like that news flow, and I sold as soon as I possibly could, all Boeing and all my accounts and all my consumers that are following my accounts. So all the accounts I'm managing, I should say. But I looked at it a little differently this time. I didn't panic. Not that I would call what I did before panic, but I just made a good, quick decision. This time, I wanted to kind of see what was going to happen today. I don't know it's going to pull back as hard, but yet, to Eugene's point, and you all kind of echoed it, a lot will be determined once we get more data and find out exactly what happened. The plane's 11 years old, though, too. So it's been flying for 11 years. So I look at it as almost more of a maintenance thing, even if there is an issue. But you never know until we find out more specifically what it was. Again, just a very sad, unfortunate thing. I'm hanging in there with my Boeing right now. And I think it's still got a big future because even though you talked about Bombardier, it's really still a big duopoly between Boeing and Airbus. And they have a new CEO, and I think they were just turning a corner. They did have a big run recently in the stock price, so it's just above 200 now. This could drift down to maybe 180 or so. I don't know if it will, though. We'll see what happens here, and I'm watching it very closely. Okay, moving on, gentlemen. There seems to be a few hot themes in the market right now that these stocks and these categories are just flying. Then one day they pull back, then something comes out and they're flying again. And I'm talking about, of course, AI, but also quantum computing, nuclear energy. What is the theme that you like the most in the markets right now? And is there a stock tied to that theme that you're watching or invested in because of it?
Can I go first? Because after this, I have to jump
Please
off.
go right ahead.
All right. Um, uh, they're all really interesting. I think quantum computing is interesting story, but it is nascent. They don't even have they only created the right amount of the right type of element to create the actual quantum ability to do quantum computing. So they are not there yet. They need like 100 parts or something. It's something I'm still kind of learning about quantum computing. AI is more interesting because being at this conference, there's so many companies, so much technologies out there. It's becoming easier and easier for companies to implement AI, machine learning. It's still going to be a process, and I think you're going to see the AI stocks like Nvidia going up and down. It's all about throughput. How many clients are developing it, implementing it, and the amount of bandwidth they're eating to run it, and how much. And as let's say, I'm at if you heard of the company Databricks. Databricks has this whole platform for uh, being able to build on the fly AI bots, anything and everything around the machine learning AI, making it really simple. And the more clients they get, the more processors they'll have to buy from NVIDIA, which then will drive up the price. But really, it's all about their end customers. How soon can they do it? Out of the two, I would say the AI is the more kind of near term play, for the next even decade before you see anything out of the quantum computing space.
That's I'm going to let Glenn and Kyle jump in on that. But so you're basically saying, AI and definitely not quantum because we're not there here yet. Um, Glenn, what are your thoughts on this?
Yeah, quantum computing is lab technology right now, and I'd probably say IBM is probably the leader in it. They've been working on it for a long time. And if you ever see those giant apparatus that are all gold and there's tubes all over the place, that thing is basically a big refrigerator, and it has to get it down to 400 degrees below zero to actually get it to work correctly. So you're not going to have a quantum computer in your house anytime soon. In regards to say nuclear energy, I know all these, you know, there's a, a gigantic amount of power is needed to run a data center. It's usually about 5 megawatts. But when you want to do an AI data center, it's 40 megawatts, which is enough to run a small city. And so, like Microsoft and Google, they want to open up 3 Mile Island to get more power out of it. And it's like we already went like through some of these things, and you just need that much power. There's got to be a better way, So I think it's everybody wants to build these power plants. It's really for the cost overruns. But when it comes down to energy and cost effectiveness, wind and solar and batteries have gotten so cheap in 5 years that it's like, that's why I think, a lot of data centers were built near dams, Facebook and Google and Microsoft. They were looking for hydropower plants all over the place because they need a constant power supply for their data centers. But I still think like AI and neural networks, that really kind of seems to be working. And in 3 years, it's working better. And when you apply it inside your corporate environment, it can really, it's kind of like super data mining. The thing is, what's going on now is that people don't want to have their data inside of the AI models out in the cloud. So if you're a financial company, if you're the government, you want your own private AI cloud in your own space because you don't want other companies pilfering the data from your models. So I think that's where a lot of this is going to go, where we had everything in the cloud, but you're going to have ABZ Corp is going to have their own AI cloud in their company. And then if they need more resources, they go out to like a data center somewhere and they rent horsepower if they need more. That's kind of like what Autodesk did. You do some engineering on your computer in your office, and then you rent horsepower in their back end. And then you keep your stuff private, but you can still use more horsepower. I kind of see that. That's kind of like where things are going right now.
So bottom line is you're sticking with AI, but not interested in quantum computing or the nuclear energy right now.
Yeah, we've been trying that for 50 years, and they're finishing a plant in England. It's called Hinkley Point. They've been working on it for 18 years. It was supposed to cost 8 billion. It's up to 35 billion right now, and there's a rat infestation problem because it's been working on for so long that they're basically pot committed at this point. They have to build this thing, and they just finished one down in Georgia. It took them 15 years to build one of these power plants. It just takes so long and nobody wants it. It's NIMBY, not in my backyard. And I think it's just solar energy and batteries work so well, and it's just getting so much more effective and affordable. And nuclear energy, it's like it's too little too late, like thorium and some of these other technologies. So I think AI and these things are like where everything's going right now.
Interesting. And I have a comment, but I'm going to let Kyle jump in first before I say that.
Sure. So the first thing is I'll agree with the group on quantum, right? I think quantum is certainly going to be the future. And in addition to IBM, you have companies like Google, which are heavy into it. And but it's right now really the only way to make money in it is if you get a company that somebody wants and they acquire it, right? So you're looking at a company that's going to be acquired by a bigger player, and you certainly could make a nice profit off of it. But as far as it actually being out there and producing and creating tangible results in dollars like AI is doing, I mean, it's certainly 5 to 10 years down the road. So you're not going to see it from that perspective. You're going to see a lot of excitement and a lot of buzz because people are, achieving steps in quantum, but they've been achieving steps in quantum for the past 20 years as well, right? So it's going to take a little while before it becomes very profitable, and it's going to be the bigger players because, as they said, it's not cheap, right? It's huge refrigerators that are as big as buildings, right? That are running this, and so if you do want to be a part of it, you could certainly get with some of the bigger companies that have AI plays as well as some of these others like Google, IBM, and you could be a part of quantum as well through that. But certainly AI is the hottest sector right now, right? And I mean, it's going to continue to be because AI is very broad, right? So, I mean, there's all types of AI and how we're using automation and autonomous cars and robots. And I mean, it's just going to continue to grow. AI is not going to be a singular thing. Everything's going to be AI, right? At some point, it's either going to assist us in almost everything that we do or everything that we do, or it's going to do some of the things that we used to do, right? So AI is going to be in everything. So that's just going to continue to grow. But as it continues to grow, it's also one of the things that can cap its growth is energy. Because as Glenn was saying, it requires massive amounts of energy. We're creating massive amounts of data every day. And as these models have to learn and continue to grow, and they want them to be faster and able to do the things in real time, you need massive amounts of energy. Now, whether the answer is going to be nuclear, there's some new options around that, or whether it's going to be something else. One of the stocks that I'm highly favored on, so we're talking about a pick for the day, is Constellation Energy. They just did a 20-year agreement with Meta. You've seen other agreements with Amazon and Google doing similar plays because they're basically what they're all trying to solve for is how is they're going to get their energy because they know they're going to be huge consumers. And right now, that's probably going to be the biggest bottleneck if it's not solved. Is we can create all these data models and continue to enhance AI, and soon when it gets to the point where everybody's using it, there's currently not enough energy for the demand. And so they have to solve that problem. And I think we're in the early stages on the energy side. And that's where I see the bigger growth will be through those data centers and energy solutions. Over the next 5 to 10 years, I think we'll see bigger growth there because it's not as hot of a sector right now as AI is.
I think interesting, and tend to think that energy is going to be a big play, not necessarily nuclear right now. I'm looking more traditional energy because I think, rising tide lifts all boats. And so some of your current energy companies should benefit from it. However, interestingly enough, I don't know if you guys saw, but the Air Force just signed a contract with Oklo to build a nuclear energy plant for them. And Oklo stock jumped like 25% yesterday, I believe it was, due to that. That stock has been in the last probably 2 to 3 months in a range between 18 and 70. And it's all about the nuclear energy. So that's one reason I wanted to bring up these different themes, to see what you're thinking. My feeling about the themes right now is play some energy, maybe spread it out a little bit, but I think even some traditional energy is going to benefit from this. So, before we get to our last question, Kyle, I've got a question because you've been an investor in MicroStrategies. What are your feelings about Bitcoin right now? Because Bitcoin it's been setting new record highs and it's going up there.
Yeah, absolutely. And I mean, Bitcoin, it reached its new all-time high, here recently around 111,000. And and so anytime anything's around its all-time high, right, you always get a little nervous, right? Because obviously it's much easier to go down from there, and it's pulled back a bit, but I mean it's been holding strong in the 105,000 plus range. I think it was around 108,000, last time I looked today. And so I think there's a lot of there's going to be continued growth there. We're seeing, I mean, this administration is a lot more crypto friendly. Where now the government's going to hold Bitcoin, where before they would have turned it over to the U.S. Marshals and sold it. And so, and other countries are going to follow suit. So as you have more people hold something that has a limited supply, you're only going to see the price go up. We're seeing more companies now wanting to hold it on their books, right, on their balance sheet. GameStop just announced it, but they announced it in a terrible way, and their stock tanked, I think around 25%. But I think that had to do with the way they were doing it, which was much different than MicroStrategy. But at the end of the day, if they do go out and purchase $1.75 billion in Bitcoin, it will be positive for Bitcoin's growth, not necessarily for GameStop, because of the way that they were doing it with convertible debt, convertible notes. And that was just a poor
Right.
model, which really impacted their stock. But once again, if you have somebody holding that Bitcoin that's out of the market, and so I think things like that, as companies continue to do that, and more people continue to get comfortable in investing in the ETFs and things like that through conventional means, I think it just creates a longer term growth model, for Bitcoin over time.
Yeah, it's a very interesting subject because it definitely has a lot of tailwinds to all the points you just mentioned. Yet there's a lot of people, as myself has been, that there's nothing behind it that have a problem with it. So, and I know Glenn feels like that too. I saw him shaking his head there. But it's hard to fight it when so many governments are getting behind it. So we'll see what goes on. But thanks for your input on that one. And with that, we'll move on to our last question today, which is if you had to buy one stock today, what would it be and why? Glenn, why don't you start us off with that?
I've been thinking about this. One company I probably should have put in my own portfolio probably 5 years ago is Darden Restaurants, symbol DRI. And they're up about 31% for the year. And I don't know. I think in America, people like to still go out to dinner. I think even though inflation has gotten under control and prices are a little bit higher, I think that people want to go out to eat. Like if you've seen any of there's lots of articles about Chili's and how they have come back, and Cracker Barrel and all these companies that they're struggling. And if they can rethink what would you call it, their recipe, they're doing okay. There's a Chili's in my town, and that place is packed every weekend, and I have a Longhorn by my house, and like I would ask the servers there when I would go there, like, how's business? And I'm like, you see people ordering expensive steaks and buying expensive alcohol, and people are going out to eat. It's like a subtle luxury for people, and it's good, decent food at a decent price. And I think Darden's is for the most part, they seem to really be effective at operating their corporation. And considering they were about $70 in the summer of 2020, and now they're 217, they've definitely, people are going to go out to dinner eventually after the pandemic, right? See the future, I guess.
Well, that is an interesting pick coming from the tech guy. I would have never guessed you'd be
I had to
picking
shake it up
Darden
a little bit,
restaurants tonight. But I'll support you in saying that they are a good company. I actually worked for Darden. Well, it was actually owned by General Mills when I worked for them years ago, for a short period. But they did a great job of managing and executing. It's a tough business right now, but
yeah.
I'll go a little further than you saying that it's a luxury that nobody wants to give up, and saying that I think it's almost more of a necessity between so many households with two working parents. And I think a lot of people just don't even know how to cook anymore because everybody's so used to eating out. So it's interesting thought there. Kyle, what's your pick today?
Yeah, so I'm going to go with the one that I was, talking about earlier, which is Constellation Energy. Doing the contracts just recently with Microsoft and Meta, reopening the 3 Mile Island, the safe side of it, right, for the nuclear energy. But just because, you have two major players who are huge, right, in the AI and data space. I think those Meta and Microsoft are only going to continue to grow as AI grows, as well as the overall technology that they provide for their separate, types of client bases. But Constellation Energy, and obviously Constellation is broader than just those two. But, just looking at that trend and seeing that we're expecting AI to continue to grow, the energy needed to continue to grow, having those contracts, which is also going to encourage others, right? So they're looking at other corporate clients in this space to sign on with these exclusive deals with them. I think is a unique proposition for them to enable them to continue to grow and help these companies meet their energy needs. As well as, they serve a broader customer base than that. And I'm looking for who's going to be the biggest player in the energy space to help these companies meet that demand. And that's where I think it's kind of the early stages of that. But I think that's where we'll see a lot of growth over the next 5 to 10 years.
I think that's a good call. I've been watching Constellation myself, and we'll be keeping an eye on them. I agree with everything you just said there. I'm going to give our viewers a different take today, and I'm going to go with Cisco. And it really has to do with the AI play. I think Cisco is about to break out. They've been hitting some new 52-week highs as well. And I think they're going to finally break out above 65. And who knows where it's going to go. I think they have some catching up to do to some of these other companies that have been getting pumped up because of AI. But Cisco supplies a lot of the infrastructure, the equipment needed for it. And I think we're going to see some big benefits, plus their acquisition that's starting to pay off for them as well. So thank you, gentlemen. Appreciate your time, and hope for all our listeners, if you want more information about investing, you can look at our website at marketocracy.io. If you want more information about the masters and their portfolios, and you can invest behind the portfolios and how you can invest behind their portfolios, please go to marketocracymasters.com. And we'll see you all again next month. So thank you.
Thank you.
And recording is